Welcome to 5 Minutes with NRT Project Accounting. Today's session will cover indirect pool setup and service center setup. We'll start in the setup module here under project accounting options, and I'll point out this is where we track fiscal year, what fiscal year in and what period we're calculating rates for, and we're doing our processing for like revenue and billing. So this is important to make sure when you're calculating your rates in your service centers, you're in the proper period and fiscal year when you're doing so. Also under setup is where we define these pools and service centers. So we'll start with indirect pool maintenance first. Pools are set up by fiscal year, and we have 4 different types of pools. We have fringe, overhead, material handling, and general administrative. The pools, you can have multiple pools within a given pool type. And again, they're tracked by fiscal year. And as you can see, we also can copy into new fiscal years, so you can just copy your structure over as you roll into a new year. You also can add and change things, obviously, as your company changes throughout time. We give it a description. We have a projected rate or a target rate and the actual rate. The actual rate is calculated in our period end menu. Whether the pool is active and what is basis. We use 3 types of cost base dollars, total labor and total cost, and then what the sequence of the pool is. In other words, think of a waterfall. The water starts from the top and cascades down, so the sequence defines how that cascade down works. Tab number 2 is a cost tab where we define the accounts that make up the numerator of the pool. These come right out of our general ledger, so you can actually do a lookup and you'll see all the accounts that are established in QuickBooks that are available, and you would pick out your fringe ones for this purpose. Or we can do add multiple, where we can actually do a range of accounts and add them in to the pool. And this applies both not only to the cost account side, but also the base accounts as well. We also give them an account type, and why we do that is if there's any kind of interpool allocations, we'll identify labor accounts versus non-labor accounts as well. And on the base accounts, it would just be the base of this pool, the denominator, that will where the allocation that how we calculate rate and what will be applied to those. So mostly for fringe, this would be all types of labor. Okay. Then we also have an overhead, and the overhead pool, again, we have our projected rates and we have our actual rates. This one is a total base pool, which basically means we're applying fringe to our labor. So, and that will be defined. You'll see there's these 2 additional tabs that don't appear on the fringe pool, but do appear in the overhead and will also appear in material handling and G&A, where we can apply interpool allocations for that pool. This one is defining fringe going into the numerator, which is any labor accounts defined in here. And this would be any pool allocations going into the denominator, which in this case is all the productive labor accounts. And basically, we also have our G&A. And G&A is a little bit more comprehensive because this is a total labor, and we have an option within NRT Project Accounting to include IR&D and B&P in our rate calculations. You can see you have these toggles that can be turned on. And this is a total base, again, our calculation order, the numerator, which makes up our accounts, and the denominator, which makes up our base, and then any interpool allocations that may come in. Okay. On the service center side, these are non-cost-based type pools. So I only have one set up for our NRT Project Accounting. That is a facility service center. Again, they are tracked the same way as a pool by fiscal year. Same concept with projected rates and actual rates. This one is based off of square footage, and we have an out account. This is one of the differences between the indirect pools and the service centers. We actually have a physical posting that takes place with the service center where it moves the cost out, what its sequence order is, what the out account is for that particular pool. And then basically we have our numerator and we have our denominator. Again, you can delete multiples, add individual counts. This is our base accounts that's applying on. You can see the base is based off of units, not off of cost. Those units will be defined by your setting up your service center, but it also, when we calculate the indirect rates, it will ask me, do I want to update these units when I'm calculating? And then if there's any interpool burdens that come in to the pool. So once we define these pools, Under our period end is where we would calculate them. So you can see we have options in period end to calculate and to apply our service centers and our pools. Now, it's not required that you have a service center, but if you do, this would be your first calculation. And you can see this is the message that would come in that says, okay, do you want to update your units before we calculate this? And if you say no, it just brings you right over and keeps the existing units that you have in your pool setup. It's now in the process of calculating the service center. If there's any labor in there, it will apply the fringe to that labor. In our particular example, we have no labor in this particular service center, so it's not applying any fringe to it. And also, we don't have any costs in the service center, so it's basically not going to apply anything at this time, but this is the concept of how the service center would work. You can have any number of service centers like you can have any number of pools as well. On the pool front, we'll go ahead and show what that calculation looks like. After we define these pool structures, we would go in each month, and you can do this more frequently if you like. It's always a year-to-date true-up between the pools. And we would go in and we would calculate our pool structure. And this will show you each individual pool, and it's a year-to-date, so it's going to show you year-to-date costs to the period you're calculating it for, and then what your actual rate is versus your projected rate variances, and so on and so forth. So we'll get a pool report here in a second, and you can eyeball this to make sure that everything looks good and there's no anomalies in your rates or anything like that. And this is basically what an indirect pool calculation report looks like. And it shows us the contents of our pool. And if we go to the bottom, it will show us our base, and then it shows us our current period rate calculation, our year-to-date calculations, our projected rate, and our variance. Okay, and we can go individual pool by individual pool here. This would be our overhead pool here. And we then will also see our G&A. So we can see we got an overhead problem there. And then we go down to our G&A, and this will also show us our calculation for our G&A as well. Once we review the report and we're okay with it, we would go ahead and print this report out. I'm just going to go ahead and close it. This will show us that it wants to update the actual rate. So what this will do is when we calculate the indirect pool, it will, if we close the report and we say, yes, we want to update our rates, it will go and it will update the actual rates on the pool itself. If you recall, when I went into the pool setup, I showed you the two rates that were on tab. Number one, the first one was projected or target. The second one was actual. That actual rate is actually updated by this report here. When we're done doing that, we would go into and we can now allocate our costs to our projects. So we go ahead and use our allocation journal here, and this will apply all three rates, and if you're using all three rates in our system, to each individual project. So it will apply the actual, the projected, and the provisional if you're using all three rates. As you can see here, I'm only using two. I'm using actual and projected, but basically if I had provisional in there, those would be applied as well. This is showing the application of the rates to the various projects throughout our system. And then when we close this report, this is actually going to update our jobs. So we'll go through and we'll update the jobs with the latest burdens that are being applied to them as we go into calculating revenue and billing and running our PSRs, our project status reports, for reporting purposes. This concludes today's session. For more information, you can visit us at our website at www.nrtbusinesssolutions.com, or you can email us at info@nrtbusinesssolutions.com. And I thank you for watching.